Oh, what's up, YouTube? What is up, everybody? Welcome to Trey's Trades. We have technical analysis on different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. So today, my friends, my family, my fellow Gorilla Gang, we're going to give you an update on ticker symbol AMC. For everybody out there who's been patient with me while I've been traveling, thank you so much. I appreciate that greatly. I know I've been dropped off the planet here for a little while. Some people are worried that my eyes are giving me some issues, which they are a little bit. I'm going to be honest with you, but it's good enough right now that I can look at the screen. I've been taking some ibuprofen. I got steroid injection, yada, yada, yada. But there's way too much freaking cool stuff going on right now that I kind of want to talk about. So let's just dive right into the video. We're going to be talking about the overall technical setup on AMC. I want to go over the kind of the setup that we've got. I've been talking about a bounce off of the $9.15 range. It's going to break over 11.20, and we are set up perfectly to make that happen right now. I picked up some $9.50 strike call options that are expiring this Friday. They are actually in the green right now that have a good shot of printing some decent money. We're going to talk about those. I want to debunk some stupid news. I want to talk about the absolute disgusting short bar fee rate that we've got rocking right now. I want to talk about BlackRock, the institutional buyer who has stepped up their position astronomically. I want to go over the Ortex numbers, and I want to talk about some SEC filing stuff that is going to play into the game here. So a lot of stuff to talk about. Let's just dive into the video and save as much time as we can. So I want to start off here with the stupid news. This is an article that's come out despite all the freaking cool stuff that we've got rocking right now with AMC. We've got this post that came off of Webull. 3 red stocks that can make big moves lower this week. Don't even pay attention to this crap. It is just a bunch of absolute garbage. We know the whole game, right? I've said this from day one. I'll say it every single day. The day that the media and the news and all these different sources stop covering negative stuff on AMC, that's the day that it's over. Think about this, right? Cinemark. When do you ever see negative stuff coming out on Cinemark? Never! Because who cares? It's a movie theater chain. They're saying movie theaters are dead. You're going to be screwed. You're going to be done. AMC is a value play right now, guys. I'm telling you, there is absolutely no freaking way that AMC is worth $9.76. Just don't see it. So don't pay attention to the stupid news. If it's validated, if it has actual grounds and basis for their beliefs, maybe, right? Maybe that's true. But I wouldn't call a plummet anything more than, like, it has to drop to $5 for me to consider that a plummet. It's just not going to happen. I just don't see that happening. So with that being said, we've got that out of the way. I want to talk about the overall short borrow fee rate, which is absolutely disgusting right now. This is just stupid. It's been trending upwards an insane amount over the last week, 2 weeks, and today it has hit 62.4% according to Stonk O Tracker. This is an absolutely stupid number. This is going to put pressure on short positions. As you can see by the title of this video, this is called the trash compactor, and that is because we're squeezing the crap out of the trash, right? These short positions, the higher that short borrow fee rate goes, the less inclined they're going to be to continue to hold their short position. It just doesn't make sense, right? An annualized interest rate of 62.4 is a lot. And this number continues to go up as it becomes a harder stock to borrow. There's less available shares to short, and the risk of them coming up profitably gets higher and higher and higher, right? Think of it as landing a green on the roulette wheel, a double green, a double zero, or a zero, right? It's just really freaking hard to do. And that's what they're trying to do here. And they're saying, look, if you want to play a game and try and land green on roulette, right, we're going to charge you a lot of money. It's going to be very hard for you to come out profitable on that. So if you want to over leverage, feel free to do so, but we're going to really incline you to not want to do that. But that's why that short bar fee rate's going up, and that is nothing but good news for us, right? So next I want to talk about the overall institutional ownership of the stock, right? And this is a huge piece of it as well. And there's a good piece of this, and I wouldn't say a bad piece, but a neutral piece, right? So the good news, right? I want to talk about BlackRock. BlackRock has stepped up their position to 27.3 million shares, according to this 13 Foxtrot that was filed on May 7th. And this doesn't necessarily mean that they bought this many shares on May 7th. That's just the day that it was filed. So they could have bought it days before or weeks before. Just keep that in the back of your mind. Their average cost is $6.16. This doesn't mean that they paid $6.16, right? This is likely, if I had to guess, the average price that they have after they already own some shares that they probably bought in the $2, $3, $4, $5 range, and then the shares that they just bought now, right? Good news. This is less shares on the market, less shares on the float that are available for shorting in the grand scheme of things. In the short term, the neutral news is this. If they wanted to lend out stock, which I imagine they likely will, this is going to be extra shares that are available for shorting. Now, what do I mean by this, right? So if you look at Ortex, you've got utilization, which is maxed out, and you've got shares that are free float on loan. This is the shares that are being borrowed, and these are the shares that are being shorted. 23.75% and 36.67% of the free float is out on loan. Now, with that that being said, what could end up happening is the shares that were bought by BlackRock, they could end up lending these out to other shorters that want to short the stock. And in the short term, that might mean that you got a little bit of selling pressure. In the long term, these guys are intelligent, right? They're not trying to lose money. They wouldn't buy 27 million shares if they didn't want to make money on it, if they didn't want to go long on it. They could have just borrowed stock and then lent it out to somebody else if that's what they wanted to do, right? So just keep that in the back of your mind. What I think this is they're trying to take opportunity in the short term to make money on that short borrow fee rate by lending out stock if they so want to, right? That doesn't necessarily mean that they will, but this is just an hypothesis of mine. If they wanted to, they could lend out stock, which is then going to create a little more short interest, a little more shorting pressure, right? In the short term, this might create a little bit of neutral or even downward selling price action. It's entirely possible. In the long term, this is just more short interest that is going to inevitably drive up the inevitable squeeze, right? So I am absolutely in love with this. This is nothing but good news for me. Anytime that you see an institution or big money, smart money, whales step into a stock, especially like AMC, that's a dead cat. That according to this stupid, freaking dumb, fake news, ridiculous article saying that this stock could make big moves lower this week. I mean, this doesn't even make sense. This is an oxymoron. Could make big moves lower. What? What is this? You bunch of silly chickens, bunch of silly chicken talk. But this is kind of what my thoughts are on this in the short term, right? Short term, long term, right? You could see this being used as an opportunity for them to lend stock to short, which could drive up that short borrow fee rate, right? Because the less stock that's available and the more people that short, the harder it is to borrow, the higher that short borrow fee rate. They're on our team, right? Maybe not even on our team, but they're there to make money, which means that if they make money, we make money. And that is a good freaking thing to see. Now, when I'll talk about Ortex, utilization absolutely maxed out 100%. Cost to borrow is not up to date on this. This is taking a different spectrum of things, but the days to cover I think is worth talking about. And this is a disgusting number, right? So on the 3-month time frame, the days to cover is the short interest divided by the overall volume, right? On a 3-month period of time, the number is going to be lower than it is on a 2-week period of time if the volume is different, and it is, right? This 3-month volume is taking into consideration some days that we had astronomically huge volume, which is kind of skewing that number a little bit, right? We had some days where there was 300, 400 million, a billion in total volume, and it might actually still be taking that into consideration, which makes that number lower. However, it is still going up. It's at 1.68. Anything over 1 I consider to be significant. The 2-week, this is astronomical. 4.62 is the days to cover on the 2-week time frame. And since the volume hasn't changed, that means that the short interest has to change, right? Because it's just two numbers that play into the equation. So the short interest going up, and we see that is validated right here because it is up 0.03% today. And overall, you got the short interest at 23.75%, which is an astronomically large number. Anything over 10% to me is significant, right? And you have had huge squeezes off of lower short interest than that. I mean, Microvision, for example, went from $10 to $30 off of, I think, like 20 or 18% or something. And that had nowhere near as much attention or traction as this does right now, right? So a lot of great things pointing in the direction. We've got an insane cost to borrow fee. We've got a great days to cover number that's continuously going up. The short interest is also continuously going up, which is absolutely beautiful. Then I want to look at the overall daily short sale volume, which we have cooking as well right now. And this is going to show you the overall trend of how much has been shorted. And I find this to be pretty freaking fascinating. Now check this out. This is loading right now. But we saw a huge uptick in total short volume. As you can see right here, it hit 65%. That is the all-time high over the last 3 months on May 6th. And that would have been last Friday. Today, no, that would have been last Thursday. So on Friday, we had 35%. But nonetheless, that short volume percentage is going up a huge amount. And this is just validating our claims of this is a heavily shorted stock, right? It's going to become harder and harder to borrow, which is going to drive up short borrow fee rate, which is going to put pressure on short positions to cover. I really do think the game is nearing its end. I think we're getting very dangerously close to the end where the squeeze could potentially happen. Now, I'm not going to give any hard days because nobody freaking knows. Anybody that tells you they know, they're lying to you, right? But my best educated guess, I stand by sometime in late May or June, right? I really do believe that we are getting close to the end game result, and that is a freaking squeeze. Now, this doesn't mean we're going to go from $9 to $1,000, $5,000, $10,000, $100,000 all in one day. It's going to be a bumpy road. It's the market after all, right? But it's going to be getting the ball rolling. We're going to talk about this more as we get into the actual charts. Now, one last thing that I kind of want to cover before we do get into the charts and just talk about that overall trend that I've been talking to you guys about is Twitter. I posted something on Twitter that was shared with me, and I think this is very worth sharing in a video, and that is this right here, right? So breaking. It appears the New York Stock Exchange made a filing with the SEC. The SEC seems to be listening to apes and apparently suspended a ton of dark pool groups effective immediately. New York Stock Exchange is appealing that they should give them 14 days to prepare. Don't give it now, SEC. Now, essentially what this is, the dark pool trading, the OTC, over-the-counter trading, right, is a backdoor way for certain brokerage firms to get orders filled without having to report numbers instantaneously, right? It's kind of I wouldn't say, well, it is kind of sleazy. It's kind of sleazy, but it's a way for them to short stock without actually, or get orders filled, I should say, without actually having to show it, right? So that's something worth talking about, and this is something worth knowing, and you really want to pay attention to these SEC filings, the NSCC, the DTCC, all these major entities that govern and regulate the stock market are paying attention. This is all starting to fall into line, right? A lot of good NSCC filings that are starting to get approved, some that are soon to get approved, right? There's actually one that's waiting to get approved on my birthday on June 21st. If that ends up coming to fruition, freaking best birthday gift of all time, guys. But so many good things pointing in the direction of a AMC squeeze on the horizon. So that is something definitely worth pointing out. And I want to wrap this up by showing you the overall trend that we've seen on the 6-month chart time frame. And it is coming to freaking fruition, guys. So I've been talking about this triple top channel, right? 1, 2, 3 times it has bounced off 11.23 and about $9.15. And I thought for sure that it would bounce off about $9.15, and it is starting to freaking happen. Today is a little bit of consolidation, and that's okay. This is exactly what I thought would happen, and I told you guys that I think this is probably likely going to happen. You're looking for this, right? Good leg up, followed by consolidation, trading sideways, followed by another leg up, followed by maybe a little bit of downward pressure, consolidation, right? Until it ultimately tests this $11.23 mark. If it gets a break over that and tests out that $14.50, $15 mark, and it gets that clean break, it's squeeze time. Game. It's freaking time to go. We're going to Tendy Town. We're bringing the chickens along for a good old freaking dance, and it is time to go. And we talked about this because it's happened before, right? Histories and trends are not coincidence. They happen for a reason, right? There are other traders that pay attention to this stuff, whether it be whales, whether it be retailers, no matter what it is. The charts tell you the psychology of buyers. People like buying on the way up. People like selling on the way down. That's just psychology. People like buying when it's ripping and selling when it's dipping. As simple as it is, right? We're not doing that. We like to buy dips and sell rips. However, this is the basic human psychology, and this is exactly what it's showing you, right? So when we finally got a good rip off of 650 with this triple top setup, people started buying. The volume increased, as you can see right here, and it ultimately tested about $14.50, right? Well, now we've got that same sort of setup right now. Trading sideways, a lot of consolidation, not a lot of volume, very, very steady, flat price action until we get this clean break over 1120 and it starts ripping again, which I can almost guarantee you, I'm 99.9% sure, break over 1120 is going to bring in volume, and you're likely going to see that test of $14.50. Break over this mark at $14.50. You are looking at squeeze time, and that is exactly what we have starting to build up here, guys. I feel very confident that this is likely going to happen. The only way that I don't see this happening, which is entirely possible, right? I don't know the future. I can't tell you what will happen. I can only take estimated guesses, is if it bounces off 1123 and retests $9, in which you're just looking at a longer time frame for the squeeze to happen. But this is set up freaking beautifully, guys. I'm loving everything about the technical setup. I'm loving the short bar fury rate. I'm loving BlackRock has stepped in. I'm loving all these new SEC filings, right? Everything is lining up. HODL on. This is a value play. AMC stock is now worth $9.83. It's just freaking not. It's worth more than that. This is absolutely on sale. I don't even see that much risk here, right? You buy AMC stock and a squeeze somehow doesn't happen, which I just don't see any possible way it doesn't, right? What are you looking at? You're looking at a freaking double up, triple up, quadruple up. I just don't see any way that you can't make money on this stock. But that is what I've got for the video here today. Hopefully you guys enjoy the new setup. This is my freaking house. Just straight up chilling. I built this desk, built this freaking desk. This is my window. You can see outside right here. Everything's looking pretty freaking nice. I like it here. I'm not gonna lie. I won't be here for the rest of my life or anything. I'll be here for a week or two, and then from there, I'm gonna go back to where I was living before, do some more work. But ultimately, this is where I'm gonna be, and I spent a lot of time just getting things set up. So that's what I've got for you guys today. Blah blah blah. I know the whole spiel. Drop a like, consider subscribing. You know the whole deal. Thanks for watching, my friends, my family, my fellow Gorilla Gang. Catch you all in the next one. Much love and peace.